Hello guys, EagleStocks here, and in today's video is gonna be different. I'm gonna be talking about my trading goals, where the money from all those trading goals is gonna come from, why the moves that I'm doing, and just a little bit about how I see the market. So my next plan for the next month that we have is I wanna have 20 Caterpillar shares, 20 ABBV shares, and 20 XOM shares. How I'm gonna be able to fund these goals is I'm gonna be trading options. As you guys know, I'm an option trader. Sometimes I'm a day trader, but most of the times I'm a swing trader, which means I buy stuff and I don't sell it by the end of the day. I sell it the next day, couple days. The longest probably is like a week period of time. Besides some options here that you see I have long, but if they reach my target, which is 75%, no greed need, I exit. Then the breakdown here, I'm gonna start with Caterpillar with its analysis, which right now it's currently sitting at the 50. Not at the 50, it's sitting at the 20, but it's sitting at the 200. My bad, that was a wrong reading there. And then on the simple moving average at the 9, it's sitting right there. So I was gonna buy Caterpillar regardless of if they cross the 200. You guys know when it crosses the 200, it's gonna be downtrending. So for me that I'm buying in a long period of time, I would not really be affected by that because I'm gonna lose dollars as it goes down, but I'm gonna keep buying more and more. So it's just like averaging down. And then as it goes up, again the same thing. And then the breakdown on the other ones, we're gonna look at ABBV here, which is dropping from the resistance. The new high is currently uptrending right now. The same deal, I'm long on them. I knew about them back here, but I wasn't really buying shares. I wasn't buying shares then, my bad on that. So you guys see here, we have that low at 62, and now they formed support at the 200, and now they took off. And then the next one was ExxonMobil, which already crossed the 200 and it's right now downtrending. Was crossed on the 1st of the 5th. Oh no, wait, what was it really cross? Yeah. And now we will say that it's downtrending because it's below the 200. So to me, this is a buy opportunity. I'm long, and then yeah. The next thing we're gonna do in this video, it's gonna be a little bit different. We're gonna look for the fundamentals. We're gonna start with ExxonMobil, as it was our last chart. There we go. Where we have dividends per share have been increasing non-stop, and then the free cash flow per share hasn't really been improving, but it hasn't gone down that much like it has at this level. 2017 they had a bad year, and then if we look at the sales per share, they've been doing better. Then the earnings per share, they've been consistent on the last past 3 years, I would say, but in 2016 they were really weak there. Then we have our gross profit, it's growing. I think this is currently, and that will be for the quarter. Let's see where we are. So we are 23, 21, 20, and then the last quarter of 2019 was really weak, and that's probably what's tanking the stock right now. And then the dividend payout, where will that be? Payout rate, I think it was somewhere here. Okay, it's paying 67%, of which 60 is the mark, but 67 will be 7 above. Price per earnings is 18, which is trading 18 times earnings. Cash flow 10. We have net going down, earnings per share going down, dividends per share going up, and the book value has been going down as the stock value has been going down as well. It's a little bit more information. I've been hunting actually ExxonMobil since it was trading at like the 80s level. So right now for me, that's a really big opportunity because I'm going to show you here. Where do I have it? Look at that. I sold my shares back then at 74, so it's tanked a lot from that moment. So right now it's like really cheap. Compare that, it's like $14 more cheap than what I sold back then, and then it's already paid me dividends in 2019. So you can see there what I'm buying now. And this is a position, I'm gonna start with 20 shares on each of these ones, but as time goes on, I might be adding more. After I complete this goal, there is another line of stocks that I'm gonna have. This mainly, I'm gonna try to build a $12,000 at least for the first. It will be dividends, which mean I will have to set up the portfolio to pay $1,000 per month just on dividends. Probably gonna be a big amount of money, but little by little you're gonna see how we brick by brick. And when I mean brick, how little, if we're building a wall, how every time those 20 shares come and are added, that's another brick that we added to the financial wall that I'm trying to build. The next step was ABBV. Numbers are gonna be a little bit different for them. We had that they had a consistent, let's do annually consistent, and they actually looks like they have a competitive advantage here because they keep raising. You see how the earnings per share are better than the ones that ExxonMobil had, and then the dividends per share, they've been increasing as well, like really good. And then the free cash flow has been growing significantly. This is actually a stock that is performing really, really good. That's probably why it's at the year high. Then price per earnings is at 17. So for look, 80% on the payout, but look, for 17 times earnings, it's a stock that it has a competitive advantage. Why do I say that it has a competitive advantage? Because if you look at the earnings per share, this shows that every year they're increasing their sales, and their earnings. This means that they can compete against the market and still increase year after year how much they make. So far out of those two companies, ExxonMobil and ABBV, the best buy will be ABBV, despite that it's trading at the year high, because it's also 17 times per earnings, and we saw that ExxonMobil was 18. And then look at the earnings per share, and the dividend increase is like massive. That's that on them. And then Caterpillar, this is kind of a stock that I have a little bit of history with them from working in construction. 2016 they had a really terrible year, as you see there, and then the earnings per share now they're really high. The dividend has been increased little by little. Book value has stayed about the same. The sales per share has increased significantly, and then gross profit margin, same. And then this one is trading right now at 12 times earnings. So this is and 36. So if we analyze all of them, the two best buys will be Caterpillar and then ABBV. I will say ABBV will be good on the earnings per share, but then Caterpillar has the same. And then if we look at how much we're paying per earnings, Caterpillar will be the best buy based on that they pay still a pretty good dividend. Payout is below at 36, something that they can keep up. And then this is a stock that's raising on dividend and book value per share. The earnings per share looks like they're dropping from 5 years ago, and the net income from 5 years ago. And then on the price earnings, 12 times earnings, that's not that bad. And the story with this is because at my first part in life, on jobs, I always work around construction. And this is from what I've seen, there is a lot of, for example, roadway construction that you can't really do those jobs with shovel or man. You need heavy equipment to be able to make things happen. And that's where I'm sitting at right now. Stay tuned for this series. It's one that I'm going to upload every so often. Maybe once a week I will update if I'm able to cop some shares. But the goal right now is probably every Friday I would like to add one of each. And then if I'm able to capitalize on, for example, a quick day trade where I'm up, let's say, let me calculate that really quick if I can find my phone. Or let's see, calculator. Here's where I'm gonna show you something that's probably gonna be really weird, but it's something that I do if this scenario happens. So if I'm day trading and I'm able in one day to pull 5 shares of CAT in profits, which will mean, let's say at 140, because I don't really look no more at the current price as that. That's like by cent by cent. If I do that times 5, that will be 700. So if I day trade and I'm able to pull this, just letting you guys know that that day I'm gonna be adding 5, because that's significantly, because if we break down the goal, that will be 1/4 of the goal right there. Having 1 already, that will put me at 6, so I will be 1/4 completed, done with that, which is a pretty good advance. And then the same is gonna go, like first I will do it with CAT. Once we are heavy on CAT, then I think will be the same if we're doing 95, let's say 98 times 5, that will be 490. And then if we do it with XOM at 62, let's say, we'll be at 310. So if in 1 week I'm able to pull this, how Robinhood has 3-4 day trades, this is gonna go here. Like, I don't even care about like growing the money for anything else. I'm gonna focus on the dividend. And yeah, this is just something so you see how I see the market and how I see money, and money always flowing. This was it for today's video. Comment below what are your trading goals, or what do you do with your trading money, and what are you trying to do in the stock market. I want to see other people's point of views and also journeys, so don't forget to like and subscribe if you are not. If you are, I really thank you for that. And then this is the video for today. Have an awesome week. Hopefully all the goals that you set get achieved.